Hello everyone, and thanks for tuning into the Financial Investor channel. My name is Brent, and today we're going to be answering a viewer and subscriber question here on the channel. We're going to be going over a question here which refers to the M1 Finance account. It goes over the IRA, and can you have cash invested in the account without it being invested in anything? Also, we're going to be going over a second question, going over some individual stocks. A viewer and subscriber left here on the channel, and he would ask, he's asking for the opinion on these stocks if I would ever invest in them. So we're going to be going over a few questions here on the channel. So if you are brand new to the channel, have not yet subscribed, hit that subscribe button below. If you do enjoy this video, find it helpful, hit that thumbs up. And if you have any comments yourself, would like to have them answered here on the channel or just individually, drop them in the comment section below. If your comment is something I believe would benefit all the viewers, the subscribers out there, if it's a question they may have in their own mind, then I may pick it and begin to do a video on it here on the channel, which again covers stock market, dividends, real estate, personal finance. So let's go ahead and get into the question here. I'm going to go ahead and flip my screen around, and we're going to go ahead and read the question really quick. I've just went ahead and funded the M1 Roth IRA with a full $6,000 for 2019. Question though, does the Roth allow you to put just $6,000 and leave it there? Or must you pick and choose stocks and ETFs to invest in? Wasn't sure how that all worked. I've switched the auto invest feature off, so I believe the money will just be transferred into the account. Does a Roth accrue interest on its own in the same way that a savings account does? Or do you need active investments for anything to happen? Thank you. So, right off the bat, we have a few questions in here. The very first one is, can you deposit capital equity into the Roth IRA on M1 Finance and have it not get invested into your portfolio in either stocks or ETFs? And as you said here in the second portion here, this individual, he turned off the auto investment feature. That is underneath the funding tab. You have a couple options up top. You will need to turn off the auto investment feature before you put any capital into the account. This happened to me back in 2018. I funded my portfolio with $5,500 in order to disperse it throughout the year on lows. Well, guess what happened? I did not have the auto invest feature turned off, and my full $5,500 went into the portfolio that I had created at that time. So number one you want to do, go to your funding tab, turn off the auto investment feature. At that time, you can deposit $1,000, you can deposit $5,000, you can deposit $6,000 for 2019 and leave it in your account uninvested in individual stocks and ETFs. When you have decided that you want to buy into a specific individual stock, an exchange traded fund, or if you have a pie that you have created that you want to allocate equity to, then you can specifically select that stock, ETF, or pie, select buy, and then begin to purchase up of an amount that you would like to have invested at that time. Or you can just head over to your funding tab, go down and look at your schedule. You can create a schedule to deposit capital into your portfolio. So every week, every month, every day, you would like just continuously buy 10, 15, or however much amount of stocks every single day going forward. You can create yourself a schedule there. So right off the bat, turn off the auto invest, deposit the cash, and you can go ahead and begin that. Now the second question in here is, does the Roth IRA, the IRA, or the taxable account accrue interest on its own? Now this question depends on the broker. M1 Finance does not have a sweeping function where it takes your uninvested capital. I've not seen this anyways. I have not seen M1 Finance do a sweeping feature where it'll take any of your uninvested capital and sweep it into, say, a money market account. Now I know that my Merrill Edge account over on Merrill Edge, or Merrill now, it'll take any uninvested capital, and I believe if it's not invested in a day or two, it'll automatically sweep it into a money market account where it'll make some sort of a percentage, and I will see in my activity tab, I will see interest that I have made off my uninvested capital. But M1 Finance, from what I have seen, they do not have an interest that is accrued if you leave cash sitting in the Roth IRA, the IRA, or the taxable account, it does need to be invested in either a stock, an ETF, a bond, or some sort of, security anyway. So that is what you would have to do in that case. And then you would make some sort of a dividend interest and such and accrue something that way. But that is that specific question. So I hope that was able to help a few of you out there who are maybe wanting to deposit capital within the M1 Finance account, but don't want to have invested it right away. So definitely turn off that feature. Put in at least $500 to get you started in your retirement account, or $100 to get you started in your taxable account. Now, I do have some affiliate links in the comment section in the description below. I would highly appreciate it if you do sign up with M1 Finance, if you would use it. It does help benefit the channel and allow me to create content such as this for all my viewers and subscribers. Now, the second question here, I'm going to go ahead and flip over to my second question. Second question here is, any thoughts on United Tech? Any interest if the price drops? Same goes for Honeywell. I know you have 3M and love that one, but I also see you have Kimberly-Clark. Any interest in Procter & Gamble? So here, I do own 3M, long-term buy and hold. I also own KMB, Kimberly-Clark. Now, this individual, he is asking if I have any thoughts or any interest if the price drops on United Tech, on Honeywell, and Procter & Gamble. Now, those are all great dividend companies. I have actually owned Honeywell and Procter & Gamble some time ago, maybe a year or 2 years ago. I've owned every one of these stocks. So here, we're going to go ahead and punch these in. United Tech, I believe, is the first one here that he had mentioned. So UTX, we have Honeywell, ticker symbol HON, and our last one was Procter & Gamble. Now, I don't specifically go out there, and so my sort of way that I invest, I have a watch list. I do look for all dividend stocks. I don't have favorites, so I do have favorites in a way, but I don't fall in love with a stock or a company the way that I do see other viewers and some YouTubers out there flaunt about their investments and prop them up over video, video over video. They talk about the exact same stock, and it's just they're in love with the company, they're in love with the product. I invest in a way that I look for value. The company has to be going somewhere. Now, I do have my strategy. If I click and go to my website, I'll show you my strategy. But I look for companies that I know what their products or services are. I know that they're financially stable. So their revenue and their net income, their free cash flow has generally been moving in a positive direction, and a few others. So here on my channel, if you go to just click on my strategy up top, this will kind of go over questions that I ask myself when I'm going and investing in a company. Is the company recession proof? Does the company expand and expect growth because of a service or a product? Will that product or service be needed in the next 1 to 5 years and continue? Every few years, I'll re-ask the question, do I see the product or service continuing to be needed? Is the industry barriers? Is it hard to get into this specific industry? I'm going to go ahead and zoom in just a bit more so all those on the mobile are able to kind of read these with me. So does it have a strong moat, a strong industry barrier, and a strong brand name? So if you go to the store and you look at a specific brand, you know who owns that company. Does the company, has the company gone IPO within the last year? I don't invest in IPOs. Uber, Lyft, Pinterest, Beyond Meats. I do not invest in IPOs. I want companies with solid backgrounds. Now, these are questions that I ask myself. I also have my strategy down here. Currently, the way that I invest, I look for companies that pay a dividend. I do really like other companies that don't pay dividends. I like Facebook, I like Google, I like Amazon, but I just do not invest at them at this current time. This is my current strategy. I look for PEs trading under the S&P 500, on average about 25 or less, depending on where the market's at. I do like any sort of companies. I do like them to have a payout ratio under 60%, unless they're a REIT. REITs have to pay usually up to 90% of their earnings back to their shareholders for the deductions. Has to have at least a history of 5-year minimum with at least a dividend growth rate of 5% or more per year. Strong balance sheets of at least 3 years of increase in revenue, net income, free cash flow. Price to book value generally lower than 3. Price to sales generally lower than 3 for the specific, if it's a asset-based company or a service and sales-based company. So that's basically my sort of strategy. Now these companies here, right off the bat, one of the first things I like to look at is it trading at a value. So here I will punch in my price, my dividend yield at a 1-year mark, and I'll punch in my 200-day and 50-day moving average. And I will take a look here for the 1 year. Has this stock traded in the negative? Now the best opportunity for UTX, United Technologies, would have been back in December 24th and prior. You can see this hard down movement here, and then going into December 26th after Christmas, when President Trump came out saying to buy the market's going to go higher. This stock has been on a tear. There was a portion here where they were just kind of trading flat. They were deciding whether they were going to go positive, whether they were going to continue moving higher or go lower. They must have really beat some earnings here, because that knocked them up out of the park. It made them break out here, and now they are pulling back. They're about fair value as far as for the year trend line here. We can see that they're fairly valued or overvalued currently. If they came back down into this 120 to 110 range, I'd feel much more comfortable going into here, because I would have a starting dividend yield probably right around 2.4%. But United Tech, it would have to come down quite a while for me to become interested in this specific company. Another thing here, Honeywell here, sort of the same way. Look at how this company has trended here just within the last month. So if we want to look at year to date, this company has gone nowhere else but up. I believe we can put in our percentages here, and we can see that Honeywell is up 25.98% year to date. UTX is up 22.51. Procter & Gamble is up 16.4. So every one of these companies here, they have been on a straight uptrend going into 2019. You can see Honeywell has started to kind of pull back here. It is still highly overvalued. Anywhere around probably 2.25 and higher of a yield, starting yield, would be worth it for Honeywell. I bought Honeywell back in 2017. Let's see here. So down in 2017, July timeframe, I had bought into this company because at that time the yield was trading above the price. I wrote it and I sold it off here in sometime around April timeframe 2018, and I haven't been invested in there since. Procter & Gamble, if we take a look here at the 1 year period, Procter & Gamble, 1 year. Take a look at this. Nobody wanted Procter & Gamble just a few years ago. Procter & Gamble in 2018, nobody wanted this company. It was trading down in the $70 range, and now you're buying this. If you're buying Procter & Gamble currently, you're getting it at $106 instead of locking in a yield of almost 4%. You're locking in a yield of 2.71. That is a horrible starting yield for Procter & Gamble. I would not touch Procter & Gamble until it dropped at least below, say, $80 to the $90 range for Procter & Gamble, where it started offering me a yield of around 3.5%. That's probably where I would begin to consider buying into Procter & Gamble. So all these companies here that were named here in the comment, all of these are just not on my radar. They're way overbought currently, and would not, I'm not currently interested in them or really considering them adding to the portfolio. Now, United Tech, if I look at a 10-year period here for their revenue, net income, and free cash flow, you can see here that they're pretty much positive for the past 10 years. Their revenue is up 25.9%. Divide 25 by 5 or 25 by 10. That's an average return for the revenue increase per year of 2.5. This is a very large company, very similar to 3M. It's a conglomerate. It has many companies. I believe it was their elevator company and a few others. I'm not familiar too much with them. I know Ian over at PPC Ian has talked about this one, is an investor in this specific company. Honeywell has shown really good revenue, net income, free cash flow here. The orange line, net income. This dip right here was 2018 tax reform. That's happened to a bunch of companies out there. You can see just a quick dip. They were able to take advantage of a couple different write-offs, probably that they didn't have prior, and they did that, and now they're back up normal. So here, net income, 19.6% on average per year. Very strong company. Procter & Gamble. Procter & Gamble, this one was interesting. I am actually not sure. I may have owned this one. I'm not 100% sure. But if I did own this one, it would have been quite a while ago. It hasn't been anywhere within the last year, year and a half. So you can see here, Procter & Gamble, it was hated in 2018. This is, you can see here the lines, their revenue, their net income, their free cash flow was on the decline from 2013 all the way down here till 2016, 2017, which is why their price, if you look at their price just sank. Their price sank, it recovered. They just didn't have any recovery as far as their revenue, net income, free cash flow, and they sank again. Now, it looks maybe recently within the last year, so let's take a look here. It looks like they're starting to recover. So within the last year, we're seeing that their net income is showing, let's go 3 year. So here within the last 3 years, you're seeing a rebound here of their net income. You're seeing a rebound, a slight uptick in their revenue, and you're still seeing their free cash flow here in the negative, but they're making some sort of return, which is probably why investors are jumping into this company. But this run up here recently, just showing off their recent earnings and stuff, isn't something to get excited about, in my opinion. It's just nothing I would specifically invest because of their growth. So those are the 3 stocks that were there in the comment. United Tech, Honeywell, and Procter & Gamble. I think that all 3 of them currently are overbought, and I don't have any interest in investing in them. If the price drops, United Tech and Honeywell are very strong contenders, but they would have to drop quite a bit in order for me to begin getting interested in these specific companies. So that is it for today's video. I hope you guys did find some value out of answering the question over on M1 Finance and taking a look at these 3 specific stocks and my strategy. It's available over my website. And if it helps you, let me know in the comment section below. And if you are brand new to the channel, have not yet subscribed, hit that subscribe. Again, stock market, dividends, real estate, entrepreneurship, hit that subscribe if you're interested in those. If you did enjoy the video, hit that thumbs up and leave a comment. Let me know if you liked this video, and thank you all for tuning in. I will see you next time. Have a great day. Bye.